Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market made a strong comeback after three consecutive weeks of losses, with the Nifty 50 closing the week with gains of nearly 2% and recording its highest weekly increase since late January. The broader market too demonstrated strength, with small cap and mid cap indices rising around 5.5% and 2.6% respectively. This rebound was mainly fueled by short covering as the indices neared key long term support levels, leading traders to close their bearish positions. Additionally, global sentiment improved following reports of a delay in US tariffs and the possibility of further negotiation, which helped stabilize financial markets. A weaker US dollar and a decline in crude oil prices further boosted investors' confidence. Among the sectors, the metal index stood out of as the leading performer. Metals rose 8.6% to register their best week in nearly 4 years on hopes of more stimulus measures from China. On the institutional side, FIIs reported net outflows of 15,500 crore in the cash segment, while DIIs contributed to around 20,000 crore, helping maintain market stability. Technically speaking, the index has resolved out of 4 weeks falling trend line, indicating a pause in the downward momentum that makes us believe index would continue the ongoing technical rise towards 23,000 mark in the upcoming week. Few factors that suggest worst is now behind us. The US 10-year bond yields has been declining and now hovering around 4.2 mark, indicating corrective bias. Brent crude is poised at lower band of past 2 years, consolidating at 69. Breakdown of 69-70 levels would boost the sentiment in the Indian market. Globally, DAX index clocked a fresh all-time high while Hang Seng index surpassed 2 years high. Volatility has been dwindling as VIX is trading at 13.6 levels, indicating low risk perception from the market participants. With concerns over an escalating trade war, investors and business leaders remain on edge, closely tracking rapid developments from Donald Trump administration. In the near term, retreating dollar and oil should help. The top 3 risks for Indian equities remain corporate earning of Q4 FY25, impact and extent of slowdown in US economy as many of our companies export to US, and tariff changes will determine change in profits of companies and competitive positions. Bottom line, Indian market is oversold and the US market is also showing early signs of slowdown with the key indices cracking on news of heightened business uncertainty. This will help foreign investors to come back soon, making India a better place to invest. And hence, we have started giving calls also. The market still needs to perform and continue this pace for the next week to signal a clear trend change. We will be closely monitoring and let you know once a confirmed uptrend is changed from the technical side. That's all for today. Wishing you a profitable week ahead. Thank you.